Okay, so if you look at analysis wise right here, um, hourly chart has dropped from pivot about 1%. Okay. Now this move right here is in itself about six, so like right here, 66%. So it could go another drop backwards. So basically, I have three charts on in my widescreen view. I'm looking mainly at the 15 here for structure, this right here for turns, and then this right here for entries and exits, right? Okay, so it just reversed right here, which is a bad sign, and I'm probably in the wrong direction. So I'm going to try it one more time. This is the last shot for buys, being that if we break this, we're going to continue down because right now on the Bollinger, this is a down bias. This right here is a down bias, and this right here is beginning to pinch. So we could be at the bottommost and the nadir. So far we only have one, two. If this goes up all the way, and we're probably not going to be at the end yet. But in the short term, we could be going up to here, to here. So not in trouble with buys just yet, because this candle right here, the body did not close. It wicked. So this right here, wicks on the bottom shows buying pressure, at least to here, to here. And it probably, this is max profit for buys. And if it's going to continue down, then you'll get the body close here. Okay, so one last shot, which is if it passes this, we're in the wrong side of the market. But usually what you'll see is it'll go green, red, and then a reversal bar green. These are just patterns that I've seen. And right now it's still continuing. Um, so I need to get out of my buys. So I'm going to wait for this and do this. I'll sell into it. I'm going to sell into it for the 2x fractal, then buy into it to get out. That is the hedge. I'm going to measure this. This is about 11, 11. So the tick profit is about right here. We are in an outside zone because it's, but this should bounce. This is the body, but we're headed towards here now. Why? Because this started right here flat, and 5% is right here. And you can see this right here is a 70 something. So the point is you need to recognize your direction, and then based on the 15 on the VWAP right here, this is a down move. But because of this area, I was like, well, it could have bounced, which is why I entered a buy because this was the second, the first, the second. Usually you have it the third and then the fourth. The fourth is the turn. And then if the sales right here don't work out, then that's more reason to get out and then build a bigger buy position because we're reversing. Okay, so what I was doing, um, 2.5 ones. Yeah, that's a good point. I mean, I could put in some zero TPs, but I'm waiting for this pullback. Um, and basically, it hasn't broken this yet. This is at the moment. Once it breaks it with the body, then the point is I'm going to get rid of the cells and let's enter some TPs.
Daddy.
Okay. And the reason I enter some TPs is just because it's a little bit easier to manage than it is without TPs since I put on too many trades. And I need to peel off the buying, the losing buy basically. So right here, I want to take the profit. Okay, so this is it. And so let's wait for it to reach. All right, and then now I buy into it. To lower my break even. So it still has the cells like that and basically peel off some. But the point is that we should get another pullback. Because if you look here, it breaks out and then what, 10 minutes later comes back. So right here, it breaks out, 5-10 minutes later, it should come back. That's why I was TPing on the cells so that I can re-enter them, recycle them. So that right there. And see now the buy is profitable, comes back. You see my break even is good. Now I'm gonna want to put it 10, it's about 6 right there. Right there. Okay. So as it comes back, then I'm gonna re-enter my sell position. So that's the reason I TPs on the cells instead of just holding, because it will it should come back to that level. So when Bollinger Band like this is overextended, it typically comes back. And then this right here is a basically at buying levels. So in the short term, it comes back further like this, fakes out, and then drops with a vengeance. So if I have zero TP cells right here, where I was at, basically it would become drawdown in cells. Okay. So you just have to understand price cycles and structures. Because really, if you think about this, it's only a trend. It's not yet an expansion. An expansion is like this. You see it goes straight down. But this is an expansion area right here. But overall time frame, this is a trend. So we're at the bottom of the channel. It should bounce back up to the top of the channel. Right here, the middle Bollinger, middle. Yeah. You can see it's kind of stalling and having trouble dropping. Because this is the fractal. Because if you look at this move, it's 2x, a fractal. This move is 2x. And this is also the pivot. So what I'm playing right now is just price action. And so I'm fading the buys for the trend. If this is an expansion, I would not fade the buys. If it's an expansion, I would be selling into it. Now there is a risk because this right here on a 1 minute, it's turning sharper. So it is possible it's turning into an expansion. Why? Because this right here, you see, is about 12, and this is about 12, but it's going further. And it's reaching for this right here. And then, since this is a long time since this, it should bounce. So that's the reason why I am buying into it and not fading sells. Or sorry, not take profiting sells. So it's just playing the higher time frame structure that right here we should get a bounce to here, which is here. It's right there. And this right now should be the first nadir. So this one won't really count because it's kind of small, but if this goes like this, it's your first. The market tends to have 3. Now if you count this, then there's first, and this would be second. And then one more, this third, and then it reverses. Why? Because market at that point would have moved right there at 1.5%. See? Typically it moved right here all the way 2%, which is too much in one direction, and people reject it. So you need that back and forth. And that's how institutions profit. So right here, if I caught the sells all the way up here, I would be selling into it, and which I did sell it here. But now this should be the 1, 2, 3 price cycles, the end of the expansion, and it should pull back 1 price cycle. So that's the only reason why I'm fading. So you could see on the 1 minute though, what I was talking about, the trend turned into expansion out, and it typically comes back to touch the trend and sometimes all the way to the top of the trend. Being that if this goes stop instead of stopping right here, it stops up here, which is also the 5. This right here is max profit. And again, that's the first nadir. So buys beginning to play out. And then I will build back my sell position. because market does this and then it drops like this. So you're selling down here, this becomes bad PTP in 15, 30 minutes. But if you're selling and caught this wave, you know, oh, look, you got rewarded for good execution. All right, so still expanding against me. Maybe my red line is about 20%. If I let it go any further, it gets into 50%, and that it really hurts. Usually you don't recover from that. At least I haven't. I've recovered from 20% before because I made 10% in a day. So that's kind of why I picked that number, because I can get double digits. Do you have a mic to where you can like unmute and talk? Yeah, so if you play it to 20% risk, it is hard to exit. You know, the whole point here is to mitigate the risk and stay within a comfort zone. So right now, 2%, 5% is still within my comfort zone. In this, well, in this account, I have up to 100. Now I'm halving it. So I changed my copy factor because I didn't want to work as hard in Darwin, especially because I'm recovering. And I have to get to 20% for allocation. So I'm more careful. And right now I put this max at 30. just to match Darwin, and then I might have to change it to 40. And the max I have is 60, because that is where Darwin will margin out. But anyways, you can see it's beginning to pull back. So this is half, it should come all the way to here, it should come to here because this is 50% of that drop. And if this is truly the nadir, it should come up to here. This might be max profit, but based on structure, based on Bollinger, I think so T1, 2, 3. Those are the three targets. Break even for me, it's decent. And all these are 0 TPs at the bottom. So the point is that if it doesn't play out, I can get out, smaller loss. I mean, it is 1%, but I can make it up. So one thing to note is this body. So okay, so before I answer that, in one Bollinger bounce, so this is where I would TP some. Because most likely it's going to come down again to retest. I could sell into it or just wait. So you can see my break even is still about the same level, but I hold. But I closed the profit to reduce the risk because I was 25. And then as it goes up, you can see like that. Now I'm watching for 50%. This move right here is 25. I'm looking at 6. I'm gonna get a fib. So we're past the 20, we're at the 62. So we're going up 100. I'm just gonna hold. See that? Now max profit is this right here. So I took T1, some. Now I'm waiting for T2. And then I'm gonna watch for it. See that? It's knowing where your profits are. So right now it's still going. This might be it. I'm gonna start TPing. Why? Because it should pull back some. And I'm gonna close out one of the trades. So this is a pick and pop right here. There it goes. So now I'm gonna wait for it to pull back. This doesn't have enough room for me to sell, but let's go ahead and sell it. So I have 3 lot sales, which I mean, even if it goes against me, then I'm fine with that drawdown. And then what I want to do is take the profit like that on the sales. So now sales is profitable, not yet max profit. This body right here is the Bollinger, the max profit. It's also a 50%. So right there, sells, I'm gonna close and then build back into my buys because we're reaching for 100%. It touched this, but it should go to here because that's where the structure is. And this cut needs to come up for the market to drop. Does it make sense? And we're back in the trend. See, we're back in the trend. So this was an expansion out, but we are still in the trend. So it should come up to the top of the trend. It's just structure. Get rid of this fib here. Now this, you see, is a great candle for sells. But what you'll start to see is this. So don't have much to. Now, because we're back in the bottom Bollinger here, we could reach down all the way and 7 pips. And because of that wicking right there, and see this still closed above it, we should go up. Yeah, it will wick a little bit, but the direction here is buys rejected that. So yes, there's selling pressure here, but there's enough buying pressure. And you can see it on the 15. Wicks doji, it should go this way and then boom. See that? This right here is A plus execution right there. Now, as it goes up, especially once it passes this, then I peel off as pick and pop. I'm not that heavy that I have to close, but I will pick and pop because of the probability of it coming up to here is very low. This right here is high, T2, T3 is lower. So I would rather pick and pop at T2, and then if it comes up to here, ride it out with the bottom trades. Would you have gone heavy there when it could not go down on that candle? I'm not following. You can annotate, all right, the Bollinger right now is forming the reversal, which should, like I said, come up to here. Now I'm out in break even. I don't really take it. I'm mid game. So David, he would be taking it, but for me, I'm just like, no. If I'm going to put on that much risk, I'm going to maximize my profits. Freaking hell, So I'm a little bit greedy there. What I'm watching for is when I can peel this one off. And right now I can, so I can just waiting for it. There it is. There's the pop. So pick off the losers, pick off the top, and then 1, 2, pick off 1, 2, 1, 2, paid for it, and now I ride it up. So now secure. Tight there. It knocked out. Meant to secure right here and it whipped me out. It's okay. Should go up. We should be testing here. So if anything, I'm going to go up. It's in buys. Excuse me a second. All right, I'm back. So now I'm going to go, we're going to write this up in buys, but in a lighter position to here, to T3. And then I will fade myself. Now, when you're saying, would I go heavy right here? In what direction? Would I go heavy in buys? No, because I would wait for here. I think I peeled off some cells by mistake. Oh no, I did profit from these. All right. There's enough room, so then I'm going to add the scalp right there. It did pull back, and it's rejecting the pullback because it stopped here. So should I mean it wicked, but based on structure, this is max profit. That's going into it, fake out kind of thing. Why? Because on the 15, this is up, so it's gonna try to test this. Does that make sense? The 15 is here, or technically here. There it is. See, it's playing out. So this is where I add now, because this is a momentum trade. But I didn't add that many. I only had 6 lots. And you would never see David do this. It would be like bad PTP. Yeah, whatever. It's good TP in my opinion because I'm precise in my timing. Well, he thinks I'm too risky because I put on a lot of trades and my volume size is huge. Because I mean, if you look at his trading, he's 0.5, 20 bullets. That's only 10 lots. And even if he were 1 lot per trade, that's still 20 lots. But for me, I'm 20 to 100. Okay. And for me, my price action, like reading the price action, in my opinion, is better than his. Only because I have pushed the limits so far there that I can now see it and execute way better. And he just looks for counter trend that his price action reads are not that great, but he does know structure and you know, like when things turn and stuff like that. All right, so this right here might be max profit, and we have enough. I'm gonna peel these off. Oops. I'm just actually gonna close. And this time I'm going to start fading my sell position. Well, David's worst drawdown, I don't know. I mean, when we were doing 1% a day, we were pushing basically 5% drawdown. And there were days where he had 10%. Okay. And why? Because I was in the same boat. He never did went into these as bad. And most of the time his drawdown was 2%. So a 2 to 1 as a scalper, or maybe a 1 to 1. So I have the same ratios here. Okay. Then when he did a 1/4%, if you look at it, his drawdown a lot of times is 0.5. Okay. So again, it's still a 2 to 1. His ratio is still not that great. It's 2 to 1. It's just that he does it in more iterations that overall becomes a 1 to 1, and then he'll get the 1/4%, then build on that, the 1/4%, So then let's say he's at the day 5%, whereas his max drawdown really good at that point becomes a 1 to 10. But the only way you're going to get such, is more iterations. Well, no, with copying, even if you get 1/4%, the best you're going to get is a 1/4% copy. Okay, most of the time, the copying is less. Sometimes, even if in your parent you get up 1/4%, your copy is a negative 4%. Okay, so the copying is not going to get you the gains. The way David was doing, he was doing 4x times a 1/4%. In math, it's still a 1/4%. Okay, but in dollar amounts, it's 1% of one account. So this is where he was changing the 4x model by saying, if I had a 100K account and I got 1%, that's 1K. So if I had 4 times 100K times a 1/4%, which is 250 times 4, it's the same 1K. So he was getting 1% in dollar amount, but never in the percentage. So I'm looking for this right here before I build heavier cells, and then all the way up to here. All right, go ahead, add here. Even though I see this rounding, it could very much retest this, or this is it. Once it breaks this 5, though, the next candle, though, the green. So you either have follow through or you're gonna have reversal, because these two candles are dojis. Now, from this drop right here, it's already a 0.5% change. So market could turn back to retest here, but based on this structure, it should continue right here to 0.7, 0.6. I don't think it would retest up. It should go the distance right here before it ever comes back. because there's more volatility this way than there is to go this and this. All right, now I'm gonna put heavier cells. I'm gonna TP here because it could bounce. And the way I do it, I want to bank my profits while I'm riding it. I don't ever want it to like, oh man, I had all that profit and I didn't take it. Now it's like, hey, at least I took some of it. Took it off the table. You can see it's still the doji, and this body is where you can see it wicked, and freaking hell, I missed. Anyways, adding to the cell because now the structure here on the 1 minute is down. And if I got my direction right, might as well capitalize on it. So what I do is I scalp a bigger. See, this is turning. This is forming the divergence that is headed here. No, EU is small. It's like 6 price cycles, 6 pips price cycle. Sorry. GU is like twice as big, and then UJ is really big. GU though is pretty big. It's just I mean, I don't want to switch right now. Anyway, see, so banked some profits and ride it in a smaller position. That is risk management. See, banked 100 something. You can see I'm already up 1%. So in what, less than an hour, 1% to me is just easy. Okay, don't want to add right here. Do not add right here because it sometimes bounces. Why? Because we're in that doji area. If you want to add, you have to wait for the break to add because this is a confirmation. But adding here, this is where David would say is bad PTP. And because what will happen is you get the bounce like this, and then you get this. Yes, this is going down as far as this Bollinger, but we're at bounce points. And you got 0, 1, 0, 1 right here, 2. So I'm going to add, I will wait for that pullback again and just recycle. No, I could see it playing out. So because it wicked here and came back here and then stopped, and then the Bollingers are forming that pattern. Now do it again. And this is, again, that confirmation, because it broke it with the body, came back up, but did not come up to here. So it's going here. All right, and there, that wick up that I was talking about, basically the same level-ish. And there it is. Now you can see what I was talking about. It's coming to here is the retest. So 30 seconds, as long as it's down, if this candle turns green, then again we might come up to here, and then I just hedge it. The point though is that it came back into the trend channel and see it bounced. So now just add to the cells. Once it breaks this, and this is when I will write it up in buys and build the cells up here. But this is still in the channel. Don't like it though, because it's 1, 2, 3. Too small to see. We've got 4 minutes. You got the short-term W right here, or the M. And the VWAP, I like that it's moved down. So this is where it should drop, because it's usually, this is the breakout of the trend. It comes back to retest the trend. My breaking is not great. I'm maxed out. So add back my panel, change the params. It hasn't hit the 15-minute channel right here, which would be here. I'm looking for divergence patterns, and this was it for this, but then it passed this, and now it's the other way. So I was thinking this would play out, continuation, but it was because it rejected this, and this candle right here brought this candle in. So it should retest right here. It might bounce for this. And this is 50%, so it should turn, or it continues up here and then turns. It could, since it's just a VWAP and it hasn't broken the 15, could also turn right here. So again, not really worried, but I will look to capitalize profits in either direction. So right here, as it pulls down like this, I want my 5-lot trade to peel off. And then right here, I'm going to peel off my profits as well in case it goes up. So that I can hedge it. Because if it goes up, this is a good buying slot, say 20 something pips. And then I will build my sells again up here. I'm going to buy up. See that? Now I'm going to buy into that. I don't like TP. Now this could be an exhaustion bar, but it's reaching for this. It's testing that 15 candle. Does that make sense? And then at the 15, where it take profit and buys, and see, it just exhausted down, and now it's rejecting it. So this is where, ooh, get out of my buys real quick. Took the loss. It's okay. I could tell based on price action. Because as it was rejecting this right here, rejected fast, that it's turning this into a doji. It rejected this body right here. Your sales is coming in fast right here. That again, it was that breakout to retest this right here. So yeah, I took a loss, but the point is to and then as it comes down to here, I'm going to peel off, and hold. See, this is where my panel still has some bugs that it's annoying me with that max lots restriction. And this is closing and forming this. So it's reaching for here. So I put on some scalps that there will take off. And then again, like I said, peel off the bottom ones here, mitigate risk. See, it's too fast. Pull off, pull off, pull off, pull off. When I'm hedging, what I'm doing here is a 1-to-1 hedge to float, or I'm scalping, so I'm not hedging the full position. Because if I hedged the full position right here, you saw I got rejected, right? I missed my timing. I was trying to basically hedge it right here, and then it did get the wick, but I missed my TP because I had it up here, and then the next candle rejected so fast that I took a loss on the small scalp hedge. Okay, so now as it comes down like this, peel off the lower trades and take profit because you got to bank especially pay for losses and things like that. You got to bank it. And all these trades down here are risky because it's below the 50%. So the more you can take off, see, it's so fast. Wiki. Bam. See, now this is really good profits right there. Take off my biggest trades. Oh, I had it backwards. Freaking hell, I think I peeled off my top trades. That's why I was like, what the hell? Why is it not those lines? No, I had it right. There it goes. It's just that my top trades were so smaller that I was like, what the heck? Okay. The point here is now I have a decent size to ride. Without it's basically small risk for bigger reward. And what I would add when it breaks the structure. Once this breaks, you can add right here safely. But if this does not break, you still got the W in play. You see, it hasn't broken. But I will continue to build into the cell because it did cross this pivot. So we'll build into its smaller position here. I'm waiting for it to close below this. Okay, so back to your question, where would I have gone for a hedge? Well, because I'm heavy, and remember, this is a range, I would have had to hedge here because that means we're going to the top of the range. So you want to look at the 0.5% change. See, this is the opening price. It's also the 5% change. And there it is. So now I can secure all of my profits. If anything, I don't want to sell into it because this is a body. And you see all these Bollinger Bands. This could be max profit before you get a bounce, and then like this. So I'd rather take my profits and then build back. Doing trailing stop right now. The moment this knocks you out is when to buy. Because it usually goes. Now earlier, I took off too many, but the point is that this candle was big, that there was a high chance of it bouncing. So I was trying to take off the bottom trades to mitigate risk. So here I'm not as satisfied because I'm light in the run when I would have preferred to be heavy for that run. Because right here I'm only 1.88 when normally I could have been, 2-3% right here. But it's okay. Profit's still profit. So, see, it didn't touch. So when I move stop loss a little tighter. This is where you don't want to add. In expansion, you could. I mean, you saw this was an expansion right here. You could have added because we knew that it was going to here. Okay, it's just that in the moment it was developing right here, you don't know it was going to be expansion or just another trend. So it was really hindsight. But now once you hit 2x fractal, this is 32, 30. Eight. All right, and with that candle right there, now I add. You see, this is rejecting it. It's not yet 2x. So from here, it's 30, and this is only 17. So we have another 15 to drop. Okay, so I put on some 0 TPs to ride it, but I put some 5 TPs scalps. They're knocking me out, you see, fast, but that was an exhaustion bar. And I was trying to add, but it was too fast. So now David would say I have bad BTP. Yeah. But this is an expansion. So with expansions, this is your 50%. Comes down 50%, boom. So I talk about it, right? When you're in a range, if you expand into a range, that is. So if the market is like trending, and expands, and overall this is just a range, you counter, you are countering expansion, especially at 2x, because the range is going to bounce. Okay. Now, what in this case, this was the trend, and this is expansion. Yes, you could pull back, like counter right here, the scalp, and then this. This was the first. This is the second. So remember, we usually do 3. But if you count this as the first, then this is just the second. And so it's just really kind of how we count it. So 1, 2, as far as naders. Anyways. Here I'm going into drawdown, playing with profits. So the 0, 1, 2, 3, or you mean the naders? You should be able to see it on all time frames. You know, here's one. We're in the second right now. So you can see it in, you know, yes, in the 5-minute, you have this one right here. Okay, but this, you could use the 5-minute, but I trust more the 15 and the hour. Anyways, this is technically a range, so we could counter it, but it's not the bottom of the range. So what I'm playing is expansion to here, and then I would counter. This is making sense? So now I want to book some of this. But all you gotta watch for is range, trend, oops, and expansion. If you can identify these 3 patterns, behaviors, then you'll have A+ analysis and your profit will be higher because you're going to be on the right side of the market more often. David only has partially that because he does range and trend, and then he says OSR. But this is an expansion and it's not an OSR. So for him, he has 2.5, in my opinion, whereas I have 3. All right, see how on the 5-minute, this is now exhausting, engulfing. You should see this. Now, if I add here, it's adding to risk. But if I had added here heavier and TP'd here, that would reduce the risk. So I'm waiting for this candle to close. We still got 4 minutes. Still looking up and not good because this wick up right here invites the market to do this. Yeah, so structure on H1 and M15. M5 tells you more. M1 is more for the entries and exits. Okay, you never want to do structure on M1. Now, M1 will tell you when market is reaching. You see that? It's just a retest of the breakout. Not good on the 15 here. Not good on the hour. This is doji. You see the same on the 15. This is a doji. which invites buys back into this area. This area. But I was playing for the 2x fractal because the market typically moves 2x. Now, if I measure this body to body, 22.15, it withered out. But again, no worries because we're only in the second nadir. The nadir hasn't formed yet. So it comes up to here, becomes your second, and then your third. You see, we entered the trend. Now we should. On the 5, we're still in a trend. So now this is still okay. So even though there's a lot of buying pressure, the fact that it's closing lower body is a continuation sign, and especially on the hour. And it's good that it did not cross this. Now this candle might reject that. But so far so good for sales still. This is KPI. All right, boom, plays out. We should see it engulf in the next 5 minutes here, because it did not re-enter the Bollinger. It's now playing this Bollinger right here. It's still in the bottom channel. There we go. I'm going to bank some profits because it could range and drop. So as it comes down, what I want to do is bank some profits, come back up, recycle them, pay back like this. I don't want to peel these off. David would peel them off, but you know, especially because heavy. But for me, I risk it for this. And I have more TPs to pay for my trades. So especially these bigger ones, I want to take them off because they're riskier to hold, and especially when the profit. So I have to make sure I have enough profit. Missed that one. $210, 80 bucks profit. There we go. Now we recycle. So now it failed this, and now it's testing this again. And because of this candle right here, we still got 3 minutes. But if this closes that way, then we invite this to retouch here and come push all the way up to here. But if this candle right here closes at the body, boom, continuation. So far so good right here. So far so good. There's a lot of selling pressure, and then I'm going to add to the sales. Well, now I'm too heavy on cells in this flag area. That if it goes up, I have to start buying into it to pay for some of those cells. This is not good right here. Because if this is the bottom, I have to kill these cells and ride buy all the way up. Right now, this is at 0.6. I didn't measure that, and so high chance that institutions want to take profits and ride it up to here. But I'm playing that it because this is so close. In my opinion, there's a higher probability to test this before we do this. But you can see this is a doji right now. It's not good sign. We have just retested the 5 and it's breaking the 5. I'm going to switch to 15 and we are breaking the 15 here. So like I said, we're testing this area, here, here. We're still at the breakout. This is the second 0-1 kind of thing. But we just passed back in above. This could just be wicks. This was the breakout at light and sells because I don't have that big a position. But now we're headed to here. This is where I scalp it. Now I don't like that it right at this right here, this pivot, but I'm playing for the Bollinger in the body, which it should test this area. And these sell or these buy hedge right here. This is a buy hedge. You can see it's less though. This is just to capitalize on profits on the way up and then enter a lighter sell. So I'm still going to be top heavy instead of like this. Be top heavy in sells for that one play out. And buys might just have tapered off right there. We're back below this. So I would stop loss my buys right here. $3 minutes. Could be just a pullback like this. I'm gonna close my profits. Pay for some of the losses. And it's moving in my favor. Close the buys at a loss. Add to the sells. And so see, I don't know where the market's going, but I just play it. And now I don't mind taking a loss because you can see this right here is a 2% loss, 2K. But I will make it all back. Just in one move. this time, because I lost, we'll take off my TPs. And write it all the way down. So what happened here is I was looking at the Bollinger, but I didn't notice this pivot until it was too late because I put on the buys right at that pivot. If I put it here, I could capitalize on the buys up. But I was like, oh crap, that might have been it. Okay, so now I'm maxing out because I'm 60 something, which means I'm maxing my Darwin. I still have some more. Interesting. So right now you got the flag right here. But I think there's going to be one last expansion just because this was one. This might be two. It does that three. So if I'm correct, now if you count this as one, then this right here is two and this is three. So very risky to be in cells right here and this heavy, but I like to maximize profits. So if I'm right, it's a high reward, and then I just cut right here at a minus, oh crap, 5 already. But again, I can fix a 5% loss here. So this is not good right here. Based on this dropping fast, I thought it would continue. This is not a good candle. You see buying pressure here, and then because this was red and now this is rejecting, if this plays out to be a red candle, like doji or this, then it's good. And even if it's green, if it stops like this, that is a sells candle because it means it could not reject. It could not have enough buying pressure to engulf this candle. And the 15, same thing on the 15. But right now, there's more buying pressure, see, and then there it is. It's reaching. So it's reaching for this right here. I was right. It's just freaking hell went that way. But I did take some profits to pay for some of those losses, and now I'm in. adding to the last of the cells right here. Not a good sign though here. See how it's forming a trend? So this was like the trend down and now it's trending up. It's the expansion is seems like it's ending. So see wicked up, but the body is pushing down. So this is what I was predicting 5 minutes ago. But execution wise, it's you can see I was like A plus execution. Now I'm going into B, C execution because I lost profit. Okay. So the longer you trade, your execution and your analysis decreases because you're building up a bias. It's hard to trade. You have a personal bias. The more objective you can be, where you can see both sides of the market, you're better off. And you just wait for your like, hey, I wait for my snipes, I wait for this, and you don't miss execute so much. So when David's talking about like what's your personal bias, I'm like, no, no, no. What's the market bias? What's the market bias? Don't look at your personal bias. If you're trying to sell with the market bias, you wait for those opportunities in timing, right? And if you recognize it, then you again also could capitalize with this stuff. Okay, so right now this is okay because it's pushing down and rejecting, but this candle has to use this, it has to be a red candle. Not good right now. Now, based on momentum, and like I said, what is the best way for the institutions to make money? I still think it's take it all the way down here. That's 0.8, then take it up. And then this is, you have a volatility of 0.8 in two directions. So again, that's why I'm capitalizing on it and I'm pretty heavy. Because I'm betting on what the institutions should be doing. Yeah, I lost some on the buys, and it's like, oh crap, man. Like I said, even though this was a 5 pips move in loss for buys, it's 500. And if I have 5 pips in profit, it's only 250. So the sell or the loss is bigger. So if you look here, this was a $500 loss. Okay, and the open price, closing price, yeah, maybe it was bigger. But you see here, this was only about 92. This right here was only about 100, 250. See, so the 5 lots scalp did not pay, doesn't pay enough. And as this is playing out right there in another minute something, I'm gonna add here as much as I can and see if my Darwin maxes out. Because it is playing out. You see this candle? It's playing out. So far, it's a continuation on the 15th. Now this is good. On the 1 minute, it's forming the divergence. And then right here is staying on the bottom Bollinger. It should reach here. All right, so the next 30 minutes, it should play out and reach this bottom. All right, back to 0.3, 0.5. Waiting for an opportunity to either bounce up to recycle, but if not, I'm gonna add again to scalps. But it has to close first. So as long as it closes, and it did, here it is, there's the bounce back. All right, in that pullback, I'm trying to add and max out. Ugh, it still didn't hit that right. And this is why I TP, because there's a lot of volatility, but what it does do is it puts a lot of commission. So other folks just hold, don't TP so much. Is that you, Cliff? Yes, it could turn up, but based on the market behavior, this is not the last of it. Because the way the market does it is you'll expand down and then expand up. okay? Or you get an expansion down and then a trend up being, this is sharp move, that's for nadir. Sometimes you get more like this, the trend. That is your last of it. So the market's not done. The way the institutions will do it they will basically they sold, they're going to take profit. They sold again, they're going to take profit, and it gives people the assumption, oh look, this is a rounding, I'm going to buy, and then they push it down one more. They sell off profit, and then what do? They take profit so fast and buy into it that it becomes that expansion. So that is the market behavior. Okay. So this right here is your first nadir where you have that, and then you see the fast expansion, and it just ranges. It's going to do this again one more time. Okay. So the high probability is that we're going to sell off one more time. Okay. So everyone will be looking at this and then be like, oh my goodness, it's ranging, it's tapering out. I'm going to buy. And then what I do, they're now in drawdown and they have to buy heavy here, right? They have to go, let's say they're light, now they're medium to heavy. And the institutions will have taken profit in the sells and they add to the buys. Does that make sense? So yes, it could turn up, but the market behavior is not that. If it turns up and goes to here, it will drop one more time. Okay, I've just seen it, studied it too often. All right, so in there, right there, missed my shot because with this candle, I thought it was gonna reach, but you can see in two moves, it's still ranging. And this is right now your flash. And again, this is institutions selling off, taking profit, selling off, taking profit, selling off, taking profit, boom, sell off. So you could see this right here. When these up moves, it's almost, it's like perfect. These are bots. These are bots taking profit. This is your sign to sell into it because you're going to see it drop for the vengeance in the next 30 minutes. That's what I'm saying. It will take another 30 to an hour to reach here. And that's the very reason why I'm heavy in sells. I want to capitalize in this last move. Because if the market moved from here to here, 0.8, and reversed here, 0.5, it's huge profits for institutions. Okay, if the market moved it here 0.5 and then moved it up and then moved it here, well, it's still they're going to profit either way. Because in these TPs, you can see it's almost perfect stair steps. That's your institutions taking profit. You see this? It's stair step. So whenever you see this kind of behavior, don't get faked out. It hasn't even broken the 50%. It's still in this trend line. Okay, so structure-wise, I'm still favoring sells, even though I am in drawdown. because I know what's coming. Not just like predict, but like know it. You can see it's beginning to taper out again. And what do you have here? A 0, 1, 2. So folks are saying, oh, this is a W, wants to buy. And what do you have? A 3, that's a fake out. Boom, it drops with a vengeance. Okay, now this is the new KPI right here, and we're just at it. But you see how there's selling pressure on top? And overall, this has 13 seconds, but this is still just a doji. What I would bet is in the next 3 seconds, this closes as a red doji. And look at that. Why? Because I've seen this pattern too many times. It's red like this, one green, red, one green. It goes red again, and then another green, and then it starts down here is when it ranges. Then you have many green candles, like 1, 2, 3s and stuff like that on the 15. Okay, because this is a red doji, it invites sales back into the market. Because why? Look, bot's done its job. Sell off again. Bot does its job. What happens? Sell off again. Now, I just simply mispredicted when, because I was thinking this was 0, a 1, a 2. You got a 3 on the bottom. Okay, so again, it's going to try to test this right at the middle Bollinger. And if it doesn't go all the way up like this, then this is your nadir. Nadir, nadir. Okay, and then it could be this, a head and shoulders. But the head and shoulders on a 5 is very weak. Head and shoulders on a 15 or an hour is much stronger. If this does go up, this is the 3 right now. If this is 0, this is 1, this is 2, this is the 3. If it does go up, I just buy into it. But at this point, I don't want to buy because I could just see the fake out happening. So I'd rather close and not get rejected. Here's the body, and then if this wicks down, because right here what you have is a divergence. But if this next body rejects it, you have a divergence for the downside, which means it drops. It drops with a vengeance. And see how it's rejecting so far? You got 2 minutes here. This doesn't really say much yet. This is the KPI right here. Oops. You see that? It's almost like, did I have a crystal ball? No, it's because I traded these markets too many times being faked out that I started noticing the pattern. Now I was too heavy. Again, I typically top heavy instead of bottom heavy like this. But it's okay. That's just my style. And I'm putting a lot of risk for this right here, expecting if I'm risking 7%, well, then I make 3%, 2 to 1. Okay. I'm done trading. Why? Because the 2 to 1. Hmm? What do you see now? You see this? Buyers will try to push it up again, but I will tell you, sellers will enter the market if this is it, because it hasn't passed the middle Bollinger. So if institutions want the one more round for this right here, it will drop so fast in the next couple of minutes. Just the doji. Again, this is where now buyers will push it, will try to push it, push. And guess what? It's the trap. Buyers will buy. And then institutions sell. Now, if you are buying in all this area, make sure to TP, because again, even if you're light, you're back to zero, you can survive, buy, trade, buy, and ride it up. But see this? You see all the selling pressure? Now, right now, the Bollinger right here is up, but I am reading this. In the hour, in the 15, the bias is down. You want to take your bias from these charts. Do not take your bias from these charts, because these right here are the short-term play. This is the long-term play. And these will always win out over the short term. Now you can profit in the short term like this, but look, the long term, short term, long term. The longer term play, the higher time frame. Yes, exactly. That's why I hold out and wait and see. And then even if it goes up here, I would just survive the drawdown and ride it here. Now, David will not do that. He will just simply or sell here, sell. And he would just fade in, but he and I are different. All right, see here on the 1 minute, again, this looks like it's breaking out up, but a lot of times this is your fake out. You get 2 minutes for this. Okay. We have not broken this body right here, KPI, which means it fakes up, breaks out, gets pushed down. Now we entered this Bollinger, okay, but it could be just a wick. You see how this is going up, 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 and it's reaching what? Sell levels. This is going up, reaching sell levels. That it's beginning to correlate with a higher time frame. You see how even though it pops its head up, sales tries to reject it. We got one more minute though. Look at this. You see that? It's just rejecting. This right here is still doji. A lot of seller pressure. And just watch, in the next 30 seconds, this is going to close low. Because that's what sells have to do. But it's telling you on the H1, it will go down further because it may go up to mid Bollinger on H1. Because it hasn't ranged. If it's going to go up to the middle Bollinger, it has to range. Okay. And you see how this is a sharp move? We're not done. We're going to range for a while before this turns, and we're going to go up to this right here. And do you see that? What I'm telling you? It's not that I know them, or it's just I've been faked out too many times, and not heavy. But you learn those. You learn way, way, way much faster. And once you realize why, it's like you know how to play it. And you see how now this is a convergence, which is a turning pattern. If this was up, you'll see this next. In the next 5, 10, 15 minutes, you should see this drop so fast. It's going to be crazy. The very fact that this closed down invites sales now, because why? Look at this. You see that? It dropped fast. Failed to 50. Turning. This is what institutions play, man. They have bots to do this stuff. And so I've just seen this pattern time and time again that it's like, it's clockwork. Okay, not worried about a breakout, because any kind of a break up right here is a fake out. Because what will happen is it breaks up. People will think it's going to be buying. They'll buy, especially on the pullback, and then see right here, it's failing. It's failing. And so buyers are trying to test this to engulf the body right here. See, trying to engulf that body, but look at that. Selling pressure, selling pressure. It's freaking slow though. It's probably waiting for the top hour. Because once you, 2 minutes, new traders come in. And what will happen is new traders are going to look at this and start buying, which what brings volume to the table, and institutions sell off. Because when you see the structure, no one in their likely mind, as far as a retail trader, wants to sell. They think it's over. So they're gonna buy for this move and get rejected to here, and then buy heavy here, and institutions join them and take it up. It's just the way the market moves. So just watch. In the next 5-15 minutes, it's the institutions purposely do it. Remember, they want the market trap. And when it drops, okay, when it drops here, it's not going to stop there, because what happens is there's stops right here. There's stop losses right here. So when it drops, okay, they go stop hunt, and it drops further. So if you fit this, basically there's a 120 something level here, knocks people's stop loss out, and those are take profits, and then it bounces back with a vengeance, because this is a range, and this is only the first. So it can either bounce right at the pivot, okay, but if this is truly institutions doing it, look at here, 1% change, which is 125% fit. So what I'm trying to get you to think about here is, how are institutions trading the market? All right, you see here, doji, doji, dojis. So right now, new traders come in. It's the hour, it's the top of the hour. They're gonna buy, they're gonna buy. So you're gonna see them prices move like this. Okay, and then it's gonna get rejected. Because we still have room to drop here. All right, so I'm risking 11%, big risk. Three minutes. You see how this candle is forming? So just watch this right here. And just watch this KPI level. You see that? Buyers push it up, sellers push it down. It's going to do that for a little while. Buyers see this. What do? They not add this to it. They're going to add. Again, it's going to range here for a little bit. That's just the market behavior. So you can scalp here if you want to, but there's not enough meat, really. So I could scalp here. Didn't even enter. Well, I'm too heavy. I'm out of margin, so I can't enter. Anyways, my Darwin's out of margin. It's actually negative margin. So I'm just gonna hold. That's the only option I have for me is holding. But I'm holding because I know the market behavior. We are still in the trend on the 5 minute, this channel. So buyers try to push it up again like that, try to break out. And what institutions will do is they'll allow the breakout. Okay. They will allow it. So it's going to struggle, 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 struggle. It'll pop up like this, and then it gets rejected. And look at that. It's pushing down. It's pushing down. And then what do buyers do here? They're going to buy. They're going to buy, then buy. And I'm going to peel off some of my profits to recycle, but it's following through. So I'm going to hold. And look how fast it's dropping. So now this is like an exhaustion candle. So buyers are going to try to enter. They're going to try to enter. Okay. And it does a little bit of this. I don't have much room, so I'm going to just I'm trying to execute here. Okay, well, whatever. I'm just gonna hold. It's easier for me to hold than it is to try to peel off and recycle. But what do you see now? The M is forming on the 5 minutes. Okay, and why? Because indicators, okay, and structure says buys. That's just how institutions set up the trap. Because you have the top of the hour, people come in, they need for institutions to sell off, they need buyers. Does that make sense? So they held this for the top of the hour. And look at that. It's selling off. And it's gonna go all the way down to here and more. Because it's so close to 1%. This right here is 8.8%. 1% is right here. 1% for the day. And you see how it just holds here? This is institutions selling off. So every person who buys, they sell. This right here is a holding pattern for institutions. And like I said, I just seen this pattern way too many times, this behavior that you would call me crazy for being so heavy and holding out. Hey, Darren. Well, no, I would not take off a break even. Now, David would, But for me, I am holding for the expansion down for the last nadir. Okay, so Darren, if you want to profit, if you go to UJ and start selling some, and you should profit in the next 15, 30 minutes. Do you see this? This is a sell pattern. And see how it's not even flickering. It's just like holding right there. Okay. Institution will sell off so heavy. Anybody who is buying, they match with a sell because they need buyers. Okay, so there's your slight pullback, and then it will sell off again. So on the Bollinger, do you see this? It's still reaching for this right here. And it's doing the M. It's doing the M. So it's got your 0, your 1, your 2, and your 3 is forming. Now this is a bigger pullback than I was expecting, okay, which meant I could have taken some profits here, especially these trades, and then recycled them, but didn't do that. And you should see it continues down. Get some water. Now do you see why I'm in sales? The reward for sales is higher. You'll just do this for a while. It takes several 5-minute candles. Basically, you will do like small candle, kind of thing. So basically, it takes another. It's going to be another 10 to 15 minutes. "17 seconds. The candle should close lower. The point here is it's going to form lower, 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 lower. See, so now it's reaching for this because it closed here. You might do a little bit of this. You'll see it close here and then boom, and then your expansion. So we're about, this is 5, 10, basically 15 minutes. This is just precise timings. It's knowing the market. Since this candle went like this, this candle is probably going to beat this right here. And then the next one is probably going to be somewhere like this. Look at that, back to profit. Now you seeing what I'm saying? And we're almost there. The expansion is about to start. Boom. Close out below, and it'll go up, or sorry, it'll go down so fast you won't be able to imagine it. And look at that, 5, 10, 10%, and 11%. This is where now I can start closing off some of my profits. Start peeling off, peeling off, peeling off, peeling off, peeling off, peeling off. Trying to peel off the closest ones, but it's freaking hard. All right, got to hold. It's going to retest. Add right there, with the lightest position. And now what you'll see is all these indicators that go into oversold. So in Darwin, I'm up to something 3%. And in my parent account here, I'm up 10%. Just trying to close out at 11, but I'm holding, okay, because it hasn't reached yet. So you can say I'm a little greedy. But this is the expansion candle. So it's not going to stop right here, because this is just the range. So the expansion candle means it's going to go twice that. So right from here, 23 basically has 23 pips. See, 20 pips right here to drop before it stops. Because this is expansion. So in an expansion, um, you place the trades in the same direction. Okay. So y'all see how this is the range, and then this is the expansion. If you're countering this, you guys are making a mistake. Let's just say that. Now David will counter. Okay, there's a retest of the range breakout. And again, I'm just adding to my sells. And I tried to, like I said, tried to take some profits, but I'm holding for the 2x, which didn't really do it yet. It only went 9. This one went 18. You're blow. You're like saying, wow. Well, I was caught on the wrong side of the market too many times. So I started recognizing these patterns and why it's doing what it's doing. And now I capitalize on it. And so, like I said, in the next, in this case, another 5-10 minutes, it should drop to here. But this was what I was saying earlier. I predicted that in the next 15 minutes, it should close right there. And it did, right? It blew out, came back up. And then the next one you'll see it goes down, down. So again, it takes another 10, 15 to reach this. The market will not take it just super fast because it's too obvious. So they'll sell off like this, let it breathe, let buyers come in saying, oh, it's coming back into the range. I want to buy. What happens? Sell off, breathe. Oh, it's going to come back to retest, sell off. That's just how institutions work. There are bots doing all this stuff. There's a very big reason why this is a huge wick. It's because bots are causing it. Okay, that means it ain't gonna stop until right there. And most likely it's not gonna stop right there because there are stop losses here and it's gonna go hunting for those. So like I said, it's probably gonna stop right here where my yellow line is. And that's where I'm gonna take profit. And honestly, I really don't care. I'll just take it right there. So I could just do it right now, 28. So I'll just 20 it, 25. There we go, 25. But I'm telling you, it's not gonna stop right there. But that's where I'm gonna take profit because it's easy profit. See that? See what I mean? So you got another 2 minutes, and then, so this candle right here, we'll do this, and then the next candle will be about like this, maybe bigger, and then the next candle, and it will wick up, like if you watch the behavior, see, it wicks up, kind of thing, wicks up, wicks up. It just, I've traded so many times that I can see this stuff now. Now are you guys glad that I'm in sales? And guess what? I risked 11% earlier. Well, look, I'm at 11. It's a 1-to-1. That's me as a scalper. I'm a 1-to-1 risk reward. Okay, so because of this move right here, and the wicks might range here a little bit and then drop. So just to reduce the risk, I'm gonna peel off these bottom trades. This is very close. And there it is, it drops again. Okay, it'll drop, just watch. It hasn't finished. Don't be buying. If anything, sell into this. It's crazy. It sounds crazy, and it sounds like bad PTP and all that crap. But if you understand the market, it's reaching down, and I'm 4% in Darwin right now, hovering 4%. Look at that, 13%. And this is where, you know what, I could just take it because it's like I'm tired, I need to go to sleep. And but the point here is, which I will do. I closed in my Darwin 4%, 4.24 or whatever, and I'm gonna just close there. Again, remember the target is right here. I'm just gonna close because I need to get some sleep. But the best of luck for you guys. Okay, if you're gonna buy down here in a light, buy here, buy at the 1%. Okay, because that's where it's more likely to bounce. Okay.
Thank you, Duke. That was amazing.
Okay. What did you get out of it? I know you joined late.
Well, I'm only trading 0.02, but I'm about $10 plus whatever this closes at. I've got $10 in closed trades. So and in Darwin, because of how they figure things, I'm not taking real big positions.
Right.
Because they'll magnify it anyway.
Yep.
So, but that, yeah, the way you play by play, you described that in advance. That was amazing.
And it's playing out exactly like.
Yeah, yeah. I mean, when I've
Why?
got
Because
another.
I've just seen that behavior too often.
Yeah.
Especially when you're caught on the wrong side.
Yeah.
So this is where other traders, like, I'm gonna wrap up with this. Okay, the way to become a good trader, what you have to realize is that you have an emotional quotient.
Mhm.
Okay, and energy. Okay, energy, it takes energy to change. So as long as you're staying within your emotional comfort, there's no change. You're not going to learn as much as you want because why? You're comfortable. Does that make sense?
Yes.
So the only way you're going to change and improve and grow is to push the boundaries.
Mm-hmm.
This is not comfortable. This is uncomfortable. Does that make sense? Because it's pushing your boundaries. So if you're staying, let's say, if you say, what's your risk factor? 1% or 0.5%. This is your comfort level. You're not going to grow by staying in it. Okay.
Mm-hmm.
This is where now you use a demo account. So don't be trading this live because it will hurt big time. But even in a demo account, you will feel it.
Mm-hmm.
Okay. So what I was pushing, basically, I was pushing minus 20%, minus 50%, blowouts. Okay, these were very painful. Make
Mm-hmm.
sense? I was pushing that limit, and then what happened? My 1% comfort was right here. Now I was getting 2%. Now I was getting 5%. Now I was getting 10%.
Mm-hmm.
Why? Because it's the energy.
Mm-hmm.
Okay. And I began to recognize these, like the range and the trend and the expansions, and then the first, second, third, and then just institutions, okay, and
Mm-hmm.
percent change. So all of this stuff, just because I was pushing the limits. And so when, let's say I was buys right here and I'm maxed out, guess what? I'm watching that market like with so much um, intensity, energy,
Mm-hmm.
that I begin to recognize these things. But you guys are like, oh, I'm just gonna fade it in your comfort zone. So you're not gonna get this level of growth that you desire.
Mm.
Does that make sense?
Yeah.
So the only way to change and grow is to push the emotions. Okay. If you push the emotions, then what happens? You learn at the extremes, and then you pull back. But your comfort zone is not here anymore. Your comfort zone is bigger.
Mm.
So you will push the extremes this way, and your comfort zone will grow like this, which means if this is 1%, you're now getting 2%, and your risk is 2% or something like that. Does
Okay.
it make sense?
Yeah.
So now you will stay within a really good comfort zone that you can recognize all these things and just make your money easier. Because right now, what is happening is that your zone is your comfort zone, and your goal is here. But the only way to do it is to push your limits to engulf it. And then your risk factor and your comfort zone, your risk and your goal is now within your comfort zone. Does it make sense?
Yeah. Yeah.
Because the way it works is you have to push beyond it and then pull back. That's how you stretch a rubber band, right? Like for it to fit, you have to stretch the rubber band to extremes. It's more, and then let it tighten back to fit, right? A rubber band.
Mm-hmm. Right.
But it's the same thing with your emotions and your learning curve. I hope this analogy is helping you.
Yes.
Okay.
Yes.
So everyone who's following me, what I do is I am pushing their limits right here. And the ones who are not comfortable break.
Mm.
Okay. Because if your rubber band is too tight, too brittle, it will break.
Mm-hmm.
So that you have to be ready to expand your limits and then pull back. And then your comfort level is at the level it needs to be, which means you take comfortable risk amounts and you profit, really good.
Mm-hmm. Yeah.
All right, with that, I'm going to end the session. Any feedback on me on that explanation? Like, what do y'all get from it? No feedback?
Yeah, I think what you were saying was just we need to, you know, test the limits a little bit. And then also at the same time, you know, have a reason for why we're putting on a trade. And sometimes, you know, it looks like it's going to go against us, but we got, if we have a pretty valid reason, we just need to hang on and then it'll eventually go the way we want.
Yeah.
But the emotion can really scare
Well, that's the
us
problem.
out of trades.
Exactly. You guys are trading scared, which means you are staying within your comfort zone and
Uh-huh.
you're not going to grow. So you have to push that purposely to go scared because
Mm-hmm.
that your confidence is that because you face scarier things that when you pull back, you're confident now.
Right.
Does it make sense? But look at
Yes.
this. See that?
Yeah, look at it. We got 13 pips.
Yeah, exactly. And like I said, don't buy right here. If you put on one trade, that's fine. Buy right here. Buy at 1%, which is 140, and it could go all the way to down here, test that major number. Okay.
Yeah.
If you buy it down here, kind of fade and spread it out, you'll be much better off because at least you'll get the pullback to this level.
Mm.
But if you start right here, you're probably going to lose. Okay. If you start right here, you have room. Okay.
Yeah. Yeah.
Anyways, good luck and you guys have a great night.
Okay. Good night, Duke. Thanks.